Today's video, we are going to be discussing something that everybody loves to talk about, and that is taxes. Just kidding on that one. But taxes are important. As a business owner, you probably know that your tax burden changes a lot. It can change year on year. There could be a lot of changes you didn't even know took place, and your CPA probably makes a lot of money off of you, as they do off a lot of people, to kind of guide them through the system and provide that service. So we're going to go over today what the tax implications are for outsourcing. When you hire an outsourcing company, what your tax burden is. We're also going to be going over briefly what a EOR, or employer of record, and professional employer organization, PEO, are, what they do. Although I've also made another video covering PEOs and EORs in a little bit more detail, which I will link to as well. So let's get into the video and enjoy. If you guys are new here, my name is Fahad. I'm the founder and managing partner of Meridian BPO. We are a full-service outsourcing firm located in Princeton, New Jersey, and Lahore, Pakistan. We help companies outsource key roles in areas like customer service, technical support, software development, accounting, account management, medical billing, and so on, to, again, our managed offices in Lahore, Pakistan. So I do just want to disclose very briefly that I'm not a tax professional. None of the advice that I give in this video should be taken as tax advice. It might just be something for you to think about. Maybe ask your tax professional, your lawyer, your CPA, about, to make sure that these things can actually be applicable to your business and your use case. So just wanted to put that out there first. All right, so let's get into it. So what is the tax implication when you are hiring an outsourcing firm? So the first thing you want to understand is kind of the moving parts, the entities within an outsourcing arrangement. Now, there's two types of outsourcing arrangements primarily. One outsourcing arrangement is going to be more like what we do, offshoring, right? Where you are taking a certain role, you're giving it to an outsourcing provider, and then that outsourcing provider is going to take care of the employees who are domiciled and who are going to be residing in and working in a different country. Now, when you do that, that outsourcing provider is going to be the one who's going to have to take over kind of the responsibility from a tax, from a compliance, from a legal perspective for those employees, right? Because you're not going to be basically liable for going and forming a company overseas in the country you'd want to outsource to. Looking up the tax burden, figuring out, hiring a lawyer, locally to figure out, hey, what am I liable for? What am I not liable for? That's where outsourcing providers come in. We are basically the middleman between companies that want to outsource somewhere and want to hire talent and recruit employees in another nation, and not have to go through all of those hurdles that come along with doing so. So what outsourcing essentially is, if you are doing the offshoring model, is you are essentially offshoring those jobs. Now, if you are hiring an outsourcing firm to basically outsource a certain department for you within the U.S., so that's going to be, you're going to hire an outsourcing firm that's going to act more like a staffing company, because they're actually going to hire people within the USA, right? Or within the country that you're in. And again, this video is going to be specifically catered towards the American market because, I'm American. I understand the market much better. But, this I'm sure it would apply to other countries like UK, Australia as well. But essentially, if you are domiciled in the US and you're paying another company, the tax burden is still going to fall on them, right? So whether you're offshoring, or you are outsourcing, and that outsourcing company is hiring people domestically within the country, within the USA, that outsourcing company is still going to be the one who is going to be liable for the taxes for the most part, right? Unless you come to another kind of arrangement or agreement with the company, which you would usually do in that staffing company kind of onshoring, outsourcing type of a role. But if you're hiring a company to offshore those jobs, then, 100% of the time, really 99 to 100% of the time, that company is going to take on the entire tax burden for you. Now, if you've heard the terms employer of record or professional employer organization, I actually did make another video on this topic specifically, kind of breaking down the two, I would say the two categories and what they are, and their kind of their relation to outsourcing, or how an outsourcing arrangement would kind of fall under that, which I will link in the description below that video. But essentially, an employer of record is going to be the legal employer for a certain for an employee. So if you're hiring, again, an outsourcing provider that's hiring onshore, which means they're hiring domestically, they're hiring in the US, you're a US company, you hire an outsourcing company in the US, and they hire a US employee for you. Let's say if you're outsourcing a customer service department, right, to the US, then you're essentially going to be, they're essentially going to take over as the employer of record in most circumstances. And so the employer of record is going to be the one who's going to assume all of the payroll tax kind of compliance, all the legal compliance. Again, they're going to pay the payroll taxes. They're going to do all of those things for you, and then you are still going to be liable for managing the employees. So they're going to operate more as a staffing company. They're going to find people, recruit people for you, bring them to you, and then you're going to be the one handling the employee, managing the employee, making sure they're doing what they're supposed to do. You're going to be in charge of terminations and things like that. But essentially, that's what an employer of record is. An employer of record is going to be more a on the record kind of a service where they're just taking the employee. They legally are the kind of the employer of record for the employee, as the name says. Now, professional employer organization is a little bit different. So this is kind of in line with what outsourcing providers who offshore do, right? But PEOs, professional employer organizations, they can be, onshore entities as well. They can kind of be, you can have a relationship with them where everybody's domestic as well. And they're going to essentially take over all of the HR functions for you. And they're essentially going to have a co-employment arrangement with you and their company, right? So they are going to be, they're going to take care of the hiring, the firing, the compliance, and that. But the payroll functions, some of the, the payroll tax liabilities, they might be shared. And there's many instances where a PEO might work, but usually most companies are familiar with an employer of record. Employer of record is going to take over that liability for you. They're going to be more expensive as well because they're taking the burden of the payroll tax, especially if they're usually they're hiring domestically in the case of staffing firms. So they're usually going to be more expensive, but they're going to take care of the EOR is going to take care of your kind of your payroll liability, payroll tax liability in full. Whereas a PEO, you're going to share that liability between them. And obviously that will depend on the contract that you sign with them and kind of the arrangement that you and them come to. So now this is a really great part of outsourcing, and that is the deductions. So again, I'm not a tax advisor, and you should always check with your tax professional, CPA, lawyer, accountant, etc. But from our understanding, it is so that you are actually allowed to deduct all of the costs that you actually have for outsourcing. So very similar to when you have a 1099 employee, you are able to deduct all of that, basically, the money that you're paying the 1099 employee, for a contract job or whatever it is, for a contract role that's 6 months. You as the employer of that 1099 person, and not employer, but you are essentially the one who, signed the contract with them. They are a contractor for you. You are able to deduct that amount on your taxes. So the beauty of working with an outsourcing provider, especially if they're outsourcing offshore, is it's a very similar arrangement. Now, what does that mean? Well, usually the beauty is that with a 1099 employee, you also have to prove to the IRS that they're not an employee. And the IRS does catch on because they say, hey, look, you're basically treating this person like an employee if they're on 1099. They come into the office every day. They're here 9 to 5, 20 days a month. You give them some time off. They request some time off. You give them time off. And you're paying them, you've been paying them a pretty consistent amount every month, and they're still on your, quote unquote payroll. So what the IRS will say is they'll say, no, this is not actually an employment relation or a contractor relationship. They are an employee. You're going to be liable for payroll taxes. Now, that's because that 1099 employee is in the country. That person is in the country, and the IRS is looking at that and saying, well, they are they seem to be an employee for all intents and purposes, right? So the beauty with outsourcing is because outsourcing is different than hiring a 1099 employee. You are hiring someone in another country. And so what that does is, again, the outsourcing provider, or the BPO company, like us, for example, we have to take the liability for hiring people in Pakistan. We don't take employment liability here, right? We don't take employment liability here. And that's the beauty of working with an outsource provider, because you are then able, you see, if you're, let me break it down in a little bit of an example. So let's say you hire one person in America and you pay them $5,000 a month. Now, that $5,000 a month that you're paying them is, they're on your payroll. So you can deduct the payroll taxes that go into that, right? Because there's payroll taxes that you have to withhold, and part of them the employee pays, part of them you pay, the FICA and all of that. But the beauty with outsourcing and completely moving that employee somewhere else, right, is that you then not only do you get to pay less than the $5,000, but the whole amount that you are paying for that employee, you can then deduct as an ordinary and necessary business expense, because they are your employee. They are necessary to your operations, whether they are a developer or whether they are a UI UX designer or a copywriter or a blog post writer or a medical biller, account manager, a customer service rep. They are necessary and an ordinary parts of doing business. And the beauty is you can actually deduct your payroll in a sense, right? Because if you have, let's say, $5,000 again that you're paying one employee here, well, you could be paying 2 or 3 employees, an outsourcing company, $5,000 that will get you 2 or 3 employees. And the beauty is, whereas if you had employees in America, you would not be able to actually deduct $5,000 a month. Whereas if you're outsourcing and you're paying somebody else, if you're paying an outsourcing firm to offshore those roles to another country, well, then you actually get, the ability, again, check with your, CPA, but you do get the ability to mark those as ordinary and reasonable, or ordinary and necessary, business expenses. And so you can actually, if you're spending $5,000 a month for 3 heads in an offshoring company, you're able to deduct $3,000 or $5,000 a month on your taxes to lower your taxable income. So there's a lot of really interesting things that that could be going on and should be going on in your head when it comes to outsourcing. There's a lot of advantages from a tax perspective, from a headache perspective. You just get, a bill every 2 weeks or every month, however the arrangement is kind of scheduled. You pay an invoice, you send a wire, and that's about it. And that's a beautiful thing, because you don't have to deal with any of the headache that goes into, hiring people, firing people, managing people. Although the management is usually somewhat split, just like a professional employer organization, between the client and an outsourcing firm. But typically, that's the beauty. You don't have to put up with the headache, the FICA, the payroll taxes, the finding a payroll system that works for you, paying the payroll system a commission, health insurance for employees, all of that stuff gets managed locally by the actual outsourcing provider. And so this is a very powerful reason, I think, that a lot of companies should definitely consider outsourcing. So hopefully this video was informative. I think I covered a lot from domestic onshoring, outsourcing in a domestic context, and in a completely offshoring, a different country context, EORs and PEOs. And if you want to know more about EORs and PEOs, please do click the link below, or I'll have it linked somewhere here for you to actually go ahead and watch that to get more of specifics on what they are. I know it can be a little bit confusing. But from a pure outsourcing perspective, whether you are onshoring or offshoring, you are going to have certain tax advantages that you will not otherwise have if you are hiring a 1099 employee, in the U.S. Or if you are hiring a W-2 employee in the States. Definitely, there's a huge tax advantage if you are able to hire someone overseas as opposed to in the United States. So again, hope this was informative. Hope you guys learned a lot. Again, I'll say this one more time. Please, I'm not a tax professional. Please do check with tax professional, attorney, accountant, CPA, tax professional, again, because I am not one. But hopefully you guys found this information useful, and hopefully you found some information that you can actually give them to hopefully lower your tax liability so that you can spend more money on your business and hopefully grow bigger and bigger. All right. Thank you so much for watching, guys. Take care. Bye-bye.